Hello, 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 and welcome to Fork Friday, where we review the week and look at our chart setups and trades we took, the good, the bad, and the ugly, using pitchforks and the Harmonic scanner. So let's start sharing screen and get started. So looking at, let's pull up some of the ones that have been sent in. Here. So we've got this one first of all, which is Great British Pound, Canadian dollar. Very good setup. So what we've got here, we've got, if you look at price moving along, the green is Tokyo session coming into London. Now with GCAD, it's one of the 5 fastest pairs in the market. So if you get a good setup, it's easy to get 50, relatively easy. If you know what you're doing, to get 50 or 60 pips, it will move 50 or 60 pips. We work on a 2-to-1 ratio, 10 pip stop loss to 20 pip reward. On fast pairs, the 1-to-1 is 15 pip stop loss to 15 pip 1-to-1. So you can see this in fact went down for 100 pips, 80 pips, stop profit at 80 pips. So an extremely good trade indeed. You've got, we work on 25 pips a day, our daily goal. So you've got 3 days work done here. So number one, the pitchfork touch here, just as it's coming to the end of Tokyo. Number two, the break and retest of the pitchfork by 22 pips. So that's kind of a move in itself, isn't it? Number three, so then it comes up to the pitchfork. These must be the outer extensions, I think, because they're close together. So it's the top of a scan. So you normally get the long extension leg there. The number three, the break and test of the trend line. So here's our trend line, and one of our confirmations is a break and a retest of the trend line. So you've got that there to perfection back up to the pitchfork. See something flashing on my phone, which is a bit distracting. Number 4, 5 and 6 under the 62. Now the 62 EMA is our rolling line of support and resistance. So if we're going in for a sell, we want it to curl down, and we want to get in on a candle which is a sell candle, as this person's done here, and under the pitchfork. This is the pitchfork here, and then 7 is the stop loss up there, and 8 stop profit once it was at 80 pips, but you could have put that stop profit in earlier. So let's have a look at that. So we've got the break and the retest here of the pitchfork, the entry here. You could have done the entry here if I've been.
That's not the pitchfork, Sarah. There's only me and you on at the moment. That was the stop profit line.
Oh, this is the stop profit line. I beg your pardon. Okay, so we've got the break and the retest back to the pitchfork here under the 62 for the sell. Yeah, I get you. And then following it down, so it breaks through the 15-minute. Now, once it's come down to, I can't quite see the entry price, 174,338. So once it comes down to 174.2, about just under 200, the 15 pip mark.
That's when the stop profit went in.
Sorry?
That's when the stop profit went in at 15 pips.
Brilliant. So the stop profit in at round about here, and you can see you are above. You might have wanted to have just kept it where that orange arrow is, just above the previous high, and about, well, you were, that's okay, because you were 3 pips, at least 3 pips behind the 62 EMA, above the 62 EMA. So you're safe on that, and you've drawn your channel down, and then it starts to really plummet. It breaks out of the channel and all the way down to another pitchfork and out at 80 pips. So an amazing trade with a 1 to 8 risk to reward. So you've got you've done you know, at least 3 days work, which is quite incredible, isn't it? That's a really fantastic move. So thank you for submitting that one. And then also here we've got, I'll do this one next, Euro USD for a sell. And what we've got is we've got, again, Tokyo coming into London. The blue is New York. So Euro USD moves generally the first hour of London and the first hour of New York. So it did a fairly late move in London. It stalled out a lot above, but a very nice entry here because you've got a double protection between your entry and your stop loss. On this one, you'd have a 10 pip stop loss. So you've got pitchfork and the quarter theory, which is where the bankers all put their stop losses. So it's a very powerful line of support and resistance for us. So here comes the break and the retest of the 1 minute trend, break and retest of pitchfork. I think I would have, oh, I see, we've got the break and the retest of the 1 minute trend, because you've got to remember all this to the right, I haven't got the replay on, but all this to the right didn't exist when you're thinking about this for a setup. So this person has looked at the downward momentum, the trend is your friend. They've seen all this stalling out and it can't break above the 62 EMA. And then quarter theory, both very close with the break and the retest, and entry as soon as the sell candle closed below the 62 EMA. So that is this sell candle here. As soon as it closed below the 62 EMA, the next one is opening there, and this person's got in just about here. And this is why I don't think it's good for us to trade pitchforks on our phone. You can take the trades and put the stop profit in and close out and, you know, do what you like with trading on your phone. But I do think you need to be near your PC or tablet, and certainly that's what Chance does, who we've learnt the strategy of, Chance Gurnham on channel 20. So, and we always use the slider box because it gives us our visual reference for our 2 to 1. And something Chance said on the psychology call last night, which was really powerful. He said anything under 15 pips, he doesn't count as his 2 to 1 gain. So he ignores all that and he calls that stop profits. And it really was a light bulb moment for me, because I thought, God, you know, I need fewer trades because I have been equally guilty of over trading. He said he used to be in like 15 trades at a time. I've never done that, but I have traded 13, 14, 15 trades a day. And then I've wondered why my results haven't been that good, because it's not about the addiction to keep taking trades. You know, you can do that on a demo account. I love marking up charts. I will sit here doing other work and marking up charts just for practice, without any itching to get in the trade, but to see if I'm right. And I find that continual marking up of charts has really helped my eye. And I find if my focus isn't on, like I got caught out on one yesterday because I got in where the 62 was still going up, and I suffered 14 pips of drawdown for 2 hours as a result. And I just was looking, but it wasn't.
Sarah, we'll just remind you.
Yeah, thank you. I just wasn't, it wasn't computing. I was looking, but it wasn't kind of, the wheels weren't turning. So this is why Chance says, he said last night, he said out of 3 trades a day, he said he'll win the first one, he might win the second one, and he probably, well, he didn't say use the word probably, lose the third one. So he said he's incredibly mindful of the maths, the statistics and the compounding. So I saw several quite good setups today. As you know, I didn't trade this morning, and I don't usually trade on a Friday, but I hadn't done anything, and I thought, well, I'll pick one trade or so to do. And then there were others I was tempted with, but I didn't do them. I made 26 pips in a few minutes and I shut it down. And that's what I've learned off him. You can't rush the process. Go for your percentage per day. He said 5% is good, but you can struggle if you continually putting that pressure on yourself to make 5% on your account a day. So if you aim for 2 or 3%, then you know that's really good going. And when you get the process down, just drip feed more money in, put more money in your account, because if you've got the process down on a small account, you can equally do it on a big account. But if you think it's all about having a big sum of money in your account and that'll make you a better trader, it won't. It'll just mean you'll burn the money in the corner, and as Chance says, you may as well send it to him on PayPal. So this is a really, really beautiful trade as well. And then it just, no reason to get out of the trade while it's under the 62. I think I would have adjusted, I would have put on, this is a trade setup trend line. I think I would have put on a trade entry trend line, perhaps from this point here, because while price is under that trade entry trend line, there's no reason to get out of the trade. And sometimes it will, say you've drawn it down here, once you see price breaking there, because always think about how you're going to get out of a trade when you get in it. Once it's retraced, exit at 31 pips, so little stall out there, fabulous decision, 3-to-1 risk to reward, sees it stalling out, doesn't try to be over greedy and think, oh look, one of our favorite take profit zones down here on quarter theory and pitchfork. Also probably is noticing this is the New York reversal that comes in for the first hour in the blue session as London ends and New York starts to take over. So you do get price resting before it starts to, I see it did carry on down here, but normally in New York, it will start to reverse what the price has done in the previous session. But this can be a sort of resting consolidation zone. And I know that because I traded it live, if you remember, since last autumn through to a month or so ago when I switched to being able to change my time to 2 p.m. UK time instead of 1 p.m. So once, if the trend line had been drawn down here, then if this person hadn't got out here, once it had broken that 1 minute trend line on the trade trend line, then they would have thought, oh, hang on a minute, I'm now going back to 25, my daily goal, 20 pips, my trade goal. Should I get out of the trade? And then once it starts to break the 62, get out the trade, because why would you say to yourself, I'll suffer another hour to see if, you know, and that's probably only another 5 pips down there anyway. And we, trading this strategy, we don't stay in trades that long, bang, we like our money and go, unless it's a really strong momentum where we know it's going to break through this level here, and time of day will affect that. It probably won't break through that level and carry on for another 50 pips in between quarter theory. So fabulous trade on that one. Well done indeed to that person there. Now let's look at a couple of issues. So this was GA today, one of the fastest pairs in the market, 15 pip stop loss required on this one. So on this one, this person got in for a buy, break a retest of 1 minute trend. So here's the blue line is the 1 minute trend. Here is beautiful, usually for us, the pitchfork and quarter theory bang on together. So break and retest quite right of the pitchfork and quarter theory. Entered slightly late, but once above the 62 at 1.83115, which is here. So absolutely, I can see exactly why this looked like a buy, because we've got one rejection saying buy me of 2 major levels. Second rejection, okay, it slips a bit here down to the 1 minute trend, but second rejection saying buy me, and then it's on its way up, and then once it's got past the 62 on any of these buy candles, I can totally see why this person got in this trade. Totally see it, that it could have been a reversal. The only thing against it would have been that it is a sell scan with the pitchforks pointing downwards, and it is a strong momentum down. So that maybe should have told us something. And also GA coming out of London again into New York reversal, but it does carry, in this instance, it does carry on down. So the trade spiked up on a wick, but failed. And sometimes you get this with trades, they just sort of fail to take off, and it might take off later. We'll have a look in a minute. So sure enough, it drops down and stops them out. Now, once it does this, and you see the orange 62 crossing, there's the blue 15 minutes, so it's crossed a long time ago. So 2 break and retests here of the to the other side of the pitchfork and the quarter theory and under the 62, you could have reversed your thinking and your trade and got in here for the sell. And I have seen Chance do that. Now, he usually says, don't go straight from one trade to another. It is very aggressive trading. Leave it 15 or 20 minutes. But this is a confidence thing because it's strong downward momentum continues. You can see it's clearly doing that here. If you switched on the pivots, pivot lower, high, lower, high, lower, high, lower, high, channel forming, lower, low. You could draw on a channel on that. So could have got in here on this candle for the sell, down for, you know, 20, whatever that is, 25, 30 pips or something. So bad luck on that one. These things sometimes happen. So if we come now to the charts and look at GA here, which I've left marked up, and go back, and you can see now how that's exactly what we were talking about, the New York reversal. So now there it is. My mouse has gone a bit weird on me, gone all the way back up now. And remember also, this is Friday. It's not my favorite day to trade. There's more pips Tuesday to Thursday. Pips are also seasonal. Pairs have bigger pip ranges. I'll show you that in a minute. And Tuesdays to Thursdays, yeah, so you need to sort of bear this sort of thing in mind, and the session you're trading, etc., etc. So this is what we were talking about, where that person got in for the buy here. Am I on the 1 minute? So it must have been here. And if I increase that, because I marked this up to put in the messenger chat. So on my chart, the oh, I know what this was. Someone got in for the sell here. Sorry, it wasn't the buy. This was someone else. So I marked it up to say, well, actually, you can see how it isn't quite touching. I know it's really picky, but this is why we trade this on the computer. This is the benefit of this strategy. The downside is it's very precise. You've got to do it on the computer to see the candles very clearly. The upside is you'll usually always stay in the game without blowing accounts because you're on a 10 or a 15 pip stop loss. We're not trading 50 pips. Another benefit to it is someone that is trading with a 50 pip stop loss on an hourly time frame. We use hourly for analysis, but not for entry because they want to get 50 or 100 pips. They're working 5 times as hard as us because we can grab 50 pips on a 10 pip stop loss. So that's another reason to love this strategy. And also every pip you gain, if you just did another 1% on a trade, which is 5 pips for us, if you did that over 1%, 100 trades over the year, you've increased your account 100%. There's none of this wishy-washy 10 pips a day, oh, I've just grabbed a few here and left some on the table and all the rest of it. This is the beauty of this precise strategy. The maths on it and the compounding is really powerful. So this person unfortunately got in for the sell on the first green candle, not the doji, I think it was that one. And then of course, as you can see, it was a blue candle that actually did the full retest of the pitchfork and quarter theory, and it carried on to do the buy. So the entry for the sell was actually this green one here. And then I got out at 26 pips because it reversed, and I just didn't want to mess my day up because that's my daily target. So I would have had to have stayed in, reverse 13 pips to take me back to 13 pips profit in order for it to do another, oh, it did do another 25. But I didn't know that. For all I knew, because that engulfing buy candle, a doji sell candle, a small buy candle, for all I knew, what I thought is it could well be heading on back up here. And then I would have, although it still had the momentum on the 62, and as Chance always says, there's no reason to get out of a trade if it's below the 62. But if it had gone back up to there, then, you know, I would have only had about 8 pips. On the other hand, I could have put the, Benny, you've got food in your bowl over in the kitchen. You're being a fraud, but you are old, so I'll forgive you. So if I put a 1 minute trend on there, 1 touch, 2, 3, 4, 4 good touches. You want a minimum of, you can do 2, but you want a minimum, I think, of 3 or 4. Then there's the break, and then sure enough, it comes all, you know, it comes all the way back up. Could you have got in for a buy up here? I don't know. I don't think so, because you didn't get a clear break and retest. So I would have not really been very confident myself of saying, oh, I'll take that for a buy. And that went up for, off the pitchfork. Oh, it did do 25 pips there. So that was GA. And I was just looking where that other person got in. So they must have got in for the buy. They had 1 break and retest under the 62, another break and retest under the 62, and then it came here, up here. So I can see exactly why they got in. They got that buy candle there. So they had 2 breaks, 2 very solid breaks and retests, and then a buy candle. But I suppose what we could have said to ourselves is the orange, the 62, is flat. It's not curling up in our favor. And overall, the momentum has been down. So apart from that, that isn't an hourly spike. Apart from that spike there, which is on a sell candle anyway, it wasn't really failing. It wasn't really fully taking off, was it? So I can totally see why you got in for a buy. I can totally see it. So then it drops down here on the hour. That's a little hour. And then, of course, it takes off again. But the 62 is still very flat, and we can see the pivots are dropping by this time. And as I say, if you come out to the 15-minute, then the momentum off the D point on the sell scan has been very strongly down. I'll just take that off. Oh, actually, I might use this as the thumbnail for putting it on for YouTube. So that's what we've been in today all along. That's on the 15-minute. All that stall out along quarter theory and the pitchfork. And then the drop down, the doji candle down here. It's gone for the reversal at the moment, but it should obviously be carry on down for next week to complete the scan. So that's GA. If anyone wants to talk about anything, please say. Let me just look at the chat. I bet that's in the chat. That's, yeah, hello. Hi, Steph. Hope it's cooler there. I think you said you had storms there coming over your way. Don't send them down here. So let's look at, just run through some of the other pairs from today. Some of the ones I put in the chat when I say these are sell trade ideas, some of them I'm not necessarily thinking of getting in them myself. Some of them I am. I'm just alerting you, because I know a lot of you are busy out at work, that there is an idea to look at. You can always say, what is your analysis, or please tell us more. That's absolutely fine. So when I posted this, for example, and remember it is Friday afternoon. The reason I posted it was downward momentum. It is an upward scan though, I think, although we do trade the reversals. So that's the move GU has made. And the D point, that's an old scan. Sorry, this is in an old scan because the new one price had come out of that. There's the outer extensions, so it's in the outer extensions of an old scan, so that's what I was trading. I mean, I wasn't trading it, that's what I was looking at. So when I posted it in the trade idea, it was downward momentum, and I thought it would reverse for the New York session. So that's right, that's what I was thinking it would do, because although it was still a strong downward, well, it was tailing off, but it was a downward momentum. I put the 1 minute trend line on and I could see all these rejections off quarter theory. And as New York usually reverses London, I thought, oh, okay, well, I'll alert everyone to the fact that this might be a trade idea, but I wasn't sure. Sorry, I know I've put that on, but I think at the time I was thinking of it as a buy for a New York reversal. But it carried on down here, and then it dipped down even further, but it failed to make the quarter theory. But I think now it is coming up, but it's just late in the day. So I'm pretty sure I was looking at GU for a buy on the basis of New York reversal. So just, you can see how new channels form as well. So if we look at that trend line there, that whole channel there, let's put it out a bit, that's quite tight, but this is what the market does the whole time, and it's doing the same thing on each time frame. It's forming new channels. So that's its channel down here. Just ignore that slippage there, but there's a channel there, and then it breaks that channel. And this is on the 1 minute, but I could show you new channels on every time frame, because it's just the same thing. We're just looking at all the wrinkles. So something like that. It's sort of sidling along at the moment, but you can see that it's clearly broken this downward channel. So that's what the market is always doing, flowing like a river. And I thought that would start coming up for the London, from out of London into New York. So that was GU. GCAD, I can't remember which one. So several really good trade ideas people put in today. Someone had a really good one on, is it CAD JPY or something? Which one was it? I've forgotten which one it was now, without going back in. So GBP CAD, that was an old markup. I don't think, I'm not sure we spoke about this today. So there were some very good setups today, I thought. So again, look at your correlating pairs. So GBP generally was dropping. So in London, downward momentum, a stall out, quarter theory and pitchfork together, a break and a retest back to the 62, and an absolutely super drop. So a very clean trade here. So it's the same thing over and over, although the markets are not the same every day, which is what I like about them, being someone that gets easily bored. The patterns and what you do to get the confidence to take a trade are the same. It's the same, and I really enjoy that. So your trend line is up to you. It's a bit of a judgment. You can put it, I'll just get rid of that magnet for a minute. So you can put your trend line out here, as long as you've got a minimum of 2 touches. Try and put it on a magnet, on an anchor, onto an actual end of a wick or a candle, so that you, and make sure you, so I've got 1, 2, 3 touches either side are fine. So I've got 4, 5 touches. So that to me looks quite a good trend line. I could draw it slightly tighter in there, picking up those touches up here. That looks nice. Actually, that looks very nice. So I'm going to leave it at that. So I know I've got a strong downward momentum. I can see I'm in London session for GBP CAD. It's a fast pair, so you can get 50, 60 pips out of it, normally towards the open of London, and not usually so much on a Friday maybe, but it will give you those pips. So London, it's moved a bit later, it's carried on, stalled out, and then it did 50, it did 100 pips in London, each of these orange bands being our quarter theory 50 pips. So if we look at our markup, same thing over and over. We're thinking, so when you've got alerts being set up, so 15 pips for this one, put your alerts on, then you can come back, get on with your work and come back to it when you hear an alert come off. And then if you've got several marked up, some of them may go the opposite way, some may fail. But when you come onto the chart, you then think, oh, okay, then I'm locked in. I can see I've done my analysis before. I'm looking for a sell. So you don't have to kind of go through the machinations again of what is it I'm looking for, because by that time the move's gone and it's, as I said to someone yesterday, it's like running onto the playing field, still doing your buttons up. You want to have done your analysis before. So when you come on, you've got the confidence to think, am I going to get the confirmations for the trade that I want? So on this one, as we come out of London into New York, what have we actually got? Well, we don't get a full break of the pitchfork and a retest. Yes, we do, sorry. We don't get a full one back to the quarter theory because it's held by the 62 here. But we do get a break and a retest up to the pitchfork of 11.4 pips. And we like, if we can, we like 10 pips to show it isn't just slippage of 6 or 7 pips. So someone asked about that today. When do you know if it's slippage or a break and a retest? But we know at 10 pips generally that's good, and the 62 holds it for 1 to 5 minutes, 5 candles, and then that is your entry. You're still above the pitchfork though. You don't want to get caught in all this, so you wait until your candles are here. So any of those 5 or 6 and that one there is your entry on GCAD. Any of these sell candles, because you've already had your break and retest, it's under the 62, you're under the 1 minute trend, they are sell candles. So any of those, this is a very good one as well. You might have given up a few pips, but you're safer on the trade. And then you might just run that down to quarter theory, 40 pips. It did do 48, nearly 50. But if we're looking about an exit, it will depend on what trades you've done before. Have you already got 20 pips in your bag, or 25? Then you can afford perhaps to be a bit more risky and just run your stop profit line down. So when you're looking at the time this took from there, this is like my ideal trade. So we've got 33 pips in 40 minutes. And that to me is a beautiful trade. So that's the point at which I make my decision. Sometimes I get fed up because obviously I miss out on pips because I've got out too early. But you know, you can't argue with quarter theory, and 1, 2, you know, an engulfing candle back up, 3, 4, and then okay, it drops a bit more, but then you can see you could have stayed in for another 20 minutes to gain yourself another 10 pips, not to be sniffed at. But then after that 20 minutes, you're then in the position, the horrible position of seeing it all start to reverse on you. Danger zone once it comes to break your 1 minute trend. You're thinking, oh my God, I'm now back up at 29 pips, and I did have 38, so I've given up nearly 10 pips. And then of course, once it breaks the 62, get out the trade probably, because as you can see, back to quarter theory, and it probably will come on down here. I mean, I don't know, but if it does, who wants to sit in that another hour and a half? We've got other trades we can do. We've made a very good, very respectable 3 to 1. So that's how I like to run trades, and I don't always get it right. I do sometimes get out too early. I get stop profited out. I do all the same things you guys do, but this is why I'm trying to get, or not I am trying, I'm getting very disciplined on what chance says. Number 1, my account size. Number 2, daily percentage growth. Number 3, choice quality trades, 1, 2, or 3, not 13 or 14 trades, which I spent ages doing, and I couldn't understand why my results weren't particularly good. Well, the answer is, as chance says, you lose focus, you think you've got a good setup, but it isn't quite as good. You're slightly seeing things, but they're not there, etc., etc. So good trading is about intense focus for a less period of time. So that's GCAD. How are we doing for time? If anyone wants to chat about anything, say anything, please do. I'll just run through what I've been seeing today. So GJ was another one, again, a Great British Pound pair. So that was all in correlating pairs in the downward trend. Same thing. So what I do for London session is I open up all my London pairs, which I have on the right hand. I have green for Tokyo, same as Chance, so that when I send charts in, he's looking mostly at the same thing. He's got green for Tokyo, yellow for London, blue for New York, and then I've got my pairs marked up the same colours as those sessions. So for London, and of course some of them do apply to 2 sessions. So I open up all my London, Euro, GBP and Swiss franc. I don't do a lot of, very rarely trade Swiss franc because I find it boring and slow. I've got very few scans and I've got other favourites. So I like the 5 favourites. I don't like GN anymore after what Chance said last night. GN, GA, EN, GJ, GCAD, 5 fast pairs, first hour or 2 of London, Tuesdays to Thursdays. That's my top preference. And then it will be Euro GBP, slower pair, but Euro GBP, Euro USD, which is the major one, the only one in the market that's 1-to-1. So again, same thing, 1 minute trend line going down, looking for a sell, pitchfork and quarter theory, put my slider bar on. So I've done my setup beforehand. I'll put an alert on, which you've seen me do. I draw the horizontal line, right click, add the alert. Now what happens in this one? Oh, it did do 24 pips. So how much was that break and retest? Because this is a bit of a sneaky one. So it did a strong candle down, but it didn't give us a very clean, only 5.4 pips. So a difficult one, that one. You had the momentum in your favor, a strong engulfing candle, only 5.4 pips back to quarter theory. So you didn't get a full pitchfork touch, but I'm not surprised because it's got the quarter theory stuck in the way. And then a quick 20 pips there. So that's a confidence thing, being brave enough to think, was that a big enough break and a retest? And then you could think, oh, okay, then here's a bigger break and retest. 24 pips back to there. I'm going to get in for the sell when it's retested back again. But what does it do? It's all buy candles and above the 62, which is now curling round, and above the pitchfork. So no further sell on this one. Get rid of that. The 62 is curling up. It's broken the 1 minute trend. And if we put on another trend line, so this sort of thing is where you'd have to have the time, if you are at work, to be able to come in and see that it's not a sell and reanalyze, remark it up and say, oh, okay, I can get in for the buy. It's going for the buy. So that goes on your pitchfork. GJ, we want 15 pips. Don't always have to put 15 pips on. Sometimes chance shows the setups where you don't need 15 pips, but I just put it on as standard. So up 1 minute upward trend following the 62. So the entry, how much is that break and retest? So if we take it from the pitchfork, it's 8.3. So, and you can see the 62 has curled round anyway. So you've got 8.3 back there, and see that blue candle has wicked off the 1 minute downward trend, wicked off, touches the 62, and then there it doesn't come and do a test again right back to that 1 minute, but you get a strong buy candle. So if you missed that one, then that one would have been the entry. And then how many pips away and would we have been? Because sometimes by the time that's why I know I say every week I've got to set up my other machine, because by the time I've gone on and put the thing on, I'm a few pips out as well. So that should really technically be back on our pitchfork. So we would be 5 pips off if you hadn't caught it. Sorry, if you hadn't caught it here. After that doji closes and then it's opening here. And if we had got in there, say just as it was opening, that's only 3 pips off. So remember, 2 pips over 100 trades over the course of a year is a lot of pips that adds up as money onto your account. Just that little bit of extra attention to detail. So what happens with price? It does its 20 pips. You've got your trade goal achieved. You can still see it's above the 62, although it's tailing off. You've still got buy candles. So you might not have got the full 100%. Very few traders of any level do. But once you saw it starting to stall out, then maybe you got out at 30. And if you didn't, then sure enough, the break and the retest to the downside of the 1 minute trend. And then once it's past the 62, definitely get out the trade. Now, sometimes, as we know, we give up pips and then it carries on up to quarter theory. But this is where chance says don't give up more than 50% of the profits you've made. So if you've made 20, 25, 30 pips and it drops back to 15, 33. So if it dropped back 15 pips to here, you've now given up 50% of your profits as it's dropped below the 62. Do you really want to do that? Would you not be better off saying to yourself, I can see it stalled out for 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. I think I'll take my profit, especially if you see that, and particularly if you see it breaking and retesting the 1 minute trend. So we could get out there, because I've got the magnet on, at 25 pips on the way down, and that's your daily goal achieved. Now, what chance says is your stop loss is your profit regulator, because we know on the 1 minute chart with an hourly time frame analysis, we work 5 times less hard than the trader on the hourly who has to put a 50 pip stop loss in order to trade and win 50 pips. We only need a 10, okay, 15 pip, but generally 10 pip stop loss to make our 50 pips. But this is why this is so important, not to just sort of, get in a trade without having caught a good entry, because as Chance says, your entry dictates your loss. Your entry dictates your loss. So let's say you missed, we've just talked about getting in at, so I'm just trying to move, oh, it's because I've got the brush mark on, sorry. We've just talked about moving, we've just talked about whether we were able to get in at 3 pips off the pitchfork or 5 pips off the pitchfork. If we got in at 5 pips off the pitchfork, and remember this green box is exactly on our pitchfork, which we technically wouldn't have got, we would have been that 1 to 2 pips off, but we were up at 26 pips here, then that means if you got in 5 pips late off the pitchfork, you would not have got that 25 pips up here, it'd be back down to a trade goal of 20. So the more precise your entry, the more your profit, or the less precise your entry, potentially your loss. So say you were following this in the trade ideas, you saw it doing this and you thought, oh, sod it, I'm just going to get in for say 10 pips, I can see it's going up. Well, what's the point of that? Because as Chance says, anything below his 2 to 1, 20 pips for a 10 pip stop loss. I know this is a fast pal 15 pips, but for the purposes of you know, having a chat about it and the education, he calls that stop profiting out, and he doesn't even count it. And I didn't realize that till last night. So I thought, my God, I'm really going to start to be disciplined, not get out of trades early, perfect my entries and make sure I get that 2 to 1. That's how you compound to the level he's compounded. And I think, you know his story. He started with $40. He was a fry cook on $8 an hour. He had no money whatsoever. He and Sam built it up to $3,000 and he blew it all in one night. And they literally both, they're only young people, young married couple, very tough, cried themselves to sleep. And they had to make a big decision. Did they give it up entirely or carry on? And he said they decided to carry on because the pain of not doing it and ending up staying a farm boy in mid-Illinois, working as a farmer's assistant for $40,000 forevermore. He said the pain of that was greater, you know, than the pain of learning Forex. And that's why he stuck at it. So it really made me think about only picking 1, 2, or 3 trades a day where I can get my 2 to 1, my 20 pips, and forget the rest. So it's fine to look at all these setups. I love looking at them. I absolutely love it. And I'm happy to post them, but you don't have to take all of them. So that one we've discussed. GN is the devil, and it'll have the shirt off your back. So as a result, Justin, Connor and I can't stop staring at it. We're like moths around a light, and we know we're going to get burnt. So every time one of us is tempted to enter it, we go, no, please don't do it. Please don't do it. And then every time we don't enter, we see it does 50 pips in 15 minutes, but equally it can shoot the other way. So it's the fastest pair in the market, and Chance says, just do not trade it. So I'm not going to trade GN anymore. I do still get fascinated looking at it, but I really must try and stick to my rule, because equally you can get 110 pips in you know, a few minutes, but equally it can reverse on you very, very badly, and it can have it can whip that 15 pip stop loss off you, however brilliant your setup. So,
that was that one last week. So I'm not saying you should do this, but that was the one, you know, where I did the I was so fed up, I did the opposite of where I thought it was.
Well, now we know why. That's what Chance says. You did the opposite, and you got 100 pips, didn't you?
So
I know, it's amazing. Yeah. EuroCAD, I just kept that on because I'm going to look at the scanner, because obviously it's done something very weird. It's shot right down here, so I'm not sure about that scan anymore. Let's take that off. CAD JPY, that was a good setup. I thought there was 20 pips there. Oh, I can't remember now. I thought was it CAD JPY? Was it GCAD? People got their pips off. Oh, it was the GCAD one, wasn't it? So GCAD played ball very nicely for us earlier. Again, same thing. It had the downward trend. It had the quarter theory above the pitchfork or close together. So you've got you had your 62. your 3 confirmations sat within, protecting you between your entry price and your stop loss. And there's the entry. So the 1 minute downward trend, the 62 following down, the break and the retest of. And it's interesting because when you look at if you connect your account to my FX book or CTrader, then you will see your percentages of what trades you prefer, whether you're preferring buys or sells. So a good 10 pip break and retest. And then once it's below, followed down very nicely down there, as we said. So CAD JPY didn't work quite so well. It did it did the 10 pips there. So again, we had a setup we thought would work, but these things happen. So let's just have a quick look at this. So we had the 1 minute trend line. We had strong downward momentum in London, out of Tokyo, JPY Tokyo pair. Tokyo the third session, so it doesn't move as much as New York, and then the biggest one, London. And then it does a drop. CAD is Canadian dollar, linked to oil, Canadian dollar. The goose, is it called? I can't remember what it's called now, but it's always linked to oil. So if there's oil news, then watch your Canadian dollar. So in London, it moved. And then, as you'd expect, it's a New York session pair. So that's the Canadian dollar taking off against the JPY. So technically, probably shouldn't really have been looking at it that much in London, but it did a break. Well, it's sort of, okay, I was looking along here. So it's in the price trap. Well, I know why I got this wrong. You see, this is my excuse. Friday, I wasn't in this trade, but thinking of it as a setup idea. Friday afternoon, already been on here for a few hours. I wasn't on this morning. Didn't think, did I? Lost my concentration. What have I said all this session? Downward trend, New York reverses. It's in all that stall out. Why the hell was I thinking of it selling? Should have been thinking of it as New York reversal. See, that's sometimes you look at the charts and your brain's just not computing, and that's why you don't want to do too many trades, because this quite clearly, and it's even gone out of this scan, quite clearly this is what I would be thinking about every minute of the day. So it just shows you lose your focus. So 10 pip stop loss on this pair. I'm trying to see where that 1 minute trend is. Can't really see it any clearer than that. So if I just finish off by magnifying this one, so we can actually see the candles. I could put the replay button on. I forgot to do that today. So what have we got here? Downward trend is broken. We could actually draw that new channel. Here is the upward trend, 14:52 my time. So there's a downward fake out to the hour. Then it starts to come up above the 62. Doesn't give us a very big break and retest there. I don't think. Let's measure it. Very, very small. So strong impulse down. Yeah, I wouldn't have found that an easy one to enter, I must say, because I would have been a bit concerned. I would have said trend is broken, New York reversal. I'm covered. I've got my pitchfork quarter theory and the 62 curling round, but I probably would not have felt confident getting in until it had come up to here or here, and then I would have felt too far off the pitchfork. So for me, that wouldn't have been an easy trade, although I could see the general trend, because it's a buy, and I've only got a couple of pips there. It doesn't do a break and a retest. I had a shallow 1 minute trend, although once I'm in the trade, you do your trade trend line, so take it off an anchor there. And again, I suppose it would have to be that. there. So it's done its move now. So there was 25 pips there as well, just about. Although I'm up there, so there was more than that. But I wouldn't have found that entry very clear for me. I'm sure Chance would say he could see a big sort of thrust down and then a thrust up, but I can't quite see it the same way. And it's right outside the extensions. Now, sometimes I'm not going to do it on a Friday afternoon. I like taking trades where they actually reverse back through the Fibonacci. I've always had quite a lot of luck doing that. So you can see that price will want to come back down to at least the 15-minute or back down to here. So the last thing I wanted to show you was if I come on to Google and type in daily Forex pairs daily pip ranges. I'm sure I've put this chart somewhere before. Spread to pip. Investopedia, I really like. Zelly likes it, who's on our team as well. Which pairs are worth day trading? There is a chart. I should have tried to find it before. Rather than read it, there is a chart I've seen, but this is just written up like that. I have definitely seen a chart. Daily Forex pairs daily pip ranges chart. What's the average daily pip movement? Which currency pairs range the most? Offbeat Forex. I don't know that one. Daily Forex. Average daily trading range. The Forex Chronicles. I don't know that one. Shame, I have seen natural charts, but average daily trading range of the major Forex pairs. And remember, Forex is also seasonal. So your quarters, you should have in your head your annual trading quarters and how much you want to compound daily, weekly, monthly, quarterly, yearly, and keep that maths. And I wasn't strong on maths at school, but even I've grasped what Chance does with his little Google. I just keep my Google calculator and I just use this and I just follow what Chance says. Useful, because I have seen, I'll dig it out again because I've definitely seen a chart where it tells you as well Monday, Tuesday, Wednesday, Thursday, Friday what the pairs are and the pip ranges. So like Tuesday to Thursday, GCAD 50 to 60 pips, rather than just looking at it as a list. So if you're thinking of trading, for example, USD Chef, which I don't trade, you'll see your average on it that you can get is 38. But if you're trading GJ, average is 88, or GBP USD 75, USD CAD 60. So these are what we call the slower pairs, where you don't always get those big moves. Whereas when we're trading these faster pairs, although AN's not too big. That's got footsie and other things. Anyway, I'll try and find that chart because that is very useful. I don't know where I've put it. I know I saved it somewhere. Oh, here's some charts on here. Market time chart, average daily. Let's have a look at that. This one. Oh no, that's time. Sorry. Volatility. Trading sessions. So for example, yeah, so just go on to images on Google. So days of the week, Monday, what we're saying about the best days to trade, they've got Tuesdays and Wednesdays. I usually include Thursdays. So Euro USD, which is the main one-to-one, 92 on a Monday and 87 on a Friday. But look at the average pip range if you get your trading hours in on a Tuesday and Wednesday, 110 to 105. GU, same thing, bigger pip range to be grabbed in the midweek. Okay, here's another chart that's quite good. So just find yourself a chart and you'll see, and this one's got Thursday on it as well. Tuesday, Wednesday, Thursdays are the bigger pip ranges. And then the other one to bear in mind is, so I'll find something and load it in the units because I think it's really useful to remember that. And the other thing is seasonal, Forex trading, seasonal, I'll call it pippage, but I'm not sure what they call it. Recurring seasonal trends in the Forex markets from Investopedia. Oh, it's just, that's no, that's talking about specific pairs. Baby pips I like as well. I haven't been on it for a while. Oh, they've got a video. Seasonal composites, don't know what that means. No. All we want is a simple chart, and I know I've seen it, Forex seasonal patterns. Use seasonality to discover when Forex pairs typically rally and fall. Oh, I'm not going to read all that. The point is that there's fewer pips mid-December to mid-Feb, and you'll find fewer scans. So it might find that you're better doing HFX during that time of year, because we do grind through in the winter. You don't get these lovely big setup moves on the pitchforks. Images for seasonal pip range. Yeah, I just wanted one that shows everything rather than can't see anything there. I'll see if I can find the seasonal one. I looked at it a long time ago. So that's, I'm going to stop sharing now. Got 5 pips from GA and CJ marked up earlier. Well done, Steph. That's good. So unless anyone's got anything else to ask or chat about, which I'm very happy to chat about, then we'll call it a day. I thank you for submitting charts, by the way.
No, it's great. I learned quite a bit actually from this today.
Yeah, I'll try and because if you keep in mind the year, you know, it's so important, and divide it into quarters, both for your compounding maths, the pairs you want to trade, the number of trades, and chances compounding thing. And I'm totally going to stick to that, because I couldn't think for ages why doing 13 or 14 trades or something wasn't really getting me where I wanted to get. And I realize now it's nothing to do with it, is it? It's to do with 2 or 3 quality setups and the science of the maths of working to your percentage, and then just leave it for the day, and that will do the job for you. And if you've got more money, then add it into your account and drip feed it in and make your account bigger.
Is this something that Chance has done a video on, Sarah?
Well, it was the psychology call last night. It was like,
is that the last night? Okay.
Last night one, yeah, on channel 20. It was exactly on this point. And it was just brilliant. And I thought, because I've been thinking for ages, how do I get to that next level? Instead of, you know, sometimes you feel 1 step forward, 2 back, and you think, well, I just made all that money and now I've given it back. You know, what's going on here? Because I can do the setups, and then you realise that, like that setup I showed you, was it CAD JPY? Why the hell was I thinking that was a sell? It wasn't, you know, and I know it isn't. But your brain switches off, you see, and that's why Forex is about, as Chance says, more focused, intense, less time.
Yeah. Good lesson.
So yeah, if you've got time, have a look at that one, Darren, because it was really powerful. Okay, everyone, we'll have a lovely weekend, and
Well, thank you.
thanks for joining, and see you all next week. I'll just stop recording.